Well, good morning. We're back again.
We are.
It's December. It's the last economic update of the year. It's been an interesting year, hasn't it?
It's been a fairly interesting year on a lot of fronts.
Absolutely. Well, with that in mind, as of last Friday, the S&P is actually up 20% year to date.
I know.
And if we go back to pre-COVID, remember that?
Right, I think so.
March of 2020, S&P is actually up 40%,
Right.
but it doesn't feel like that.
No.
Talk to us about that.
I think one thing is we share those numbers with you so you can get some perspective. While we have had huge upheavals in the economy, we went through an election, we have went through some people happy with things, some people not happy with things, some people not wanting to get a shot, some people wanting to get a shot, some people, all this kind of stuff that really hasn't, from point to point, hasn't really impacted a lot of companies. Some of them have really benefited from it, some of them haven't. But this is the typical ebb and flow of a market. It's nothing unusual from this standpoint. And that's why for the last several months, though, I've been talking about, I expect to have a 10 to 15% pullback. I might be a little aggressive. We've only had one pullback over 5% this year. Normally there's three, on average.
Sure.
So we're really kind of have experienced a situation where we've had less volatility than we would have expected. But we still have had volatility, but just the number, the percentage hasn't been as much. And usually, though, these events where we have a large pullback are precipitated by some type of a tipping point event that we really just haven't had at this point.
Okay, so that's a good transition. So what's going to trigger it? What are we looking at that could potentially trigger that or not going into next year?
Okay. Well, I think there's the couple of things that really stand head and shoulders above everything else, in my view, are the rise of the Omicron virus. Variant, that's the word. Omicron variant.
It's all new to all of us.
I know, it's like whatever this stuff is. But that's a potential, although there's a lot of different varying reports of what the magnitude of impact that will have. The other thing that really I see as the bigger issue is inflation. And it's really more the scare factor of inflation. I've been around this industry long enough to have seen some higher inflation levels, and life even longer to see some higher inflation levels. It's actually been since 1990 to 1991 that we've experienced the amount of inflation we've experienced in 2021. But it's not unprecedented.
Right.
So it doesn't really scare me from the inflationary standpoint. One of the things that does give me a little concern is that over the last 3 months, the consumer confidence level has actually decreased versus where it was. It's actually back to where it was at the beginning of the year when COVID, before we had any real big run, and while COVID was still a big issue, we're actually back down to that confidence level. But on the other hand, the last 3 months, retail sales have expanded.
Right.
So we have kind of some conflicting issues there. A couple of things, other things that could play into there is the Fed is going to pull back on, they're going to be tapering on their expansionary effort. Now, that's a little complex. We're not going to get into this, but that's one of the issues that's out there. The other thing is that the economic growth is slowing. We're looking at 2022 at being about a 3.5% level. We'd hope to be a little bit more, but that's kind of where we're looking at right now.
Right.
So those are just some things out there. There's always headwinds in the economy. I think the biggest thing is the scare factor of inflation, although I'm not really that scared of inflation, having some moderate inflation. But that's probably the biggest issue that I see out there.
Right. Well, all those things have potential impact. Some may say negative, but on the other hand, there's some positive things as we look forward to 2022 as well. Right. Let's touch on those a little bit.
Well, there's some really good indicators out there. Like I said, the GDP is continuing, the gross domestic product is continuing to expand, and we expect it to continue to expand at around the 3.5% level, which is higher than it was any of the last, years from 2012 to 2020. Is about any higher than any.
Basically, companies are positioned to grow.
Correct. Also, what we're also seeing is that the I said, Purchasing Managers Index. It's an index of what purchasing managers for companies are looking at. The U.S. has been doing really well in that area, but in the last couple of months, we have seen Europe and China also starting to improve in those levels, which is very good, not only for those sectors, but also when you get the emerging markets and those areas.
Right.
So that's extremely good. Overall, the underlying economy is really strong. Otherwise,
Right.
we wouldn't be holding up the way we are.
Right.
Not from a market standpoint, although that's done very well, but from an economic standpoint. We're continuing to see economic growth.
Right.
And we still have a long ways to go because of all the issues like supply chain issues. If those things started really dissipating a lot, we would
Right.
see more expansion.
Right.
So.
Right. All right, let's bring it to the bottom line. Are the Cubs going to be any good next year?
Yet to be determined.
Yet to be determined. How about the market next year?
The market next
Bottom
year.
line.
Bottom line. Okay. We expect strong growth in the U.S. economy. We expect the end markets to probably increase by about 10% next year. That's kind of most of the things I'm looking at. More than likely, the dollar is going to weaken a little bit, which is good for those international holdings you have. So overall, I feel really pretty good going forward, albeit with some headwinds that are out there that we need to at least be vigilant in watching.
Fantastic. Well, that's a wrap.
Well, wait a minute. I got one more point.
Oh, you do?
One more point. Volatility. Do
Oh.
expect 2022
Yes.
to have
Yes.
a lot of volatility
Yes.
in it. We feel like there's going to be a lot. It is an election year, and during election years, those things tend to happen. So now you can wrap it up.
More fun to come. All right. Well, that is a wrap. Not only for this month's economic outlook, can't say that, but also for this year. And it's been a great year. And Dennis, thank you for all the great insight. We look forward to doing this again in another month in 2022. Be sure to reach out to your advisor and touch base not only here at the year end, but as we go into next year as well. Have a great week.
And have a Merry Christmas.